So game plan for today is to go over scaling and techniques. So it's really a very open-ended class. This is not going to be our traditional one where I have like a big PowerPoint ready to go. I just have three very simple slides that I'm going to work with, and then four very simple charts that I'm going to work with. A lot of this is going to be more so discussion based. Talking about what's worked for me, talking about the scaling technique that I used in 2023 and what I use now in 2024. Um, the same thing. Nothing is big surprise, but it's the same thing. I'm going to talk about how I build size and positions, and you're going to find out kind of what works for me. And I really want to emphasize something. I want to emphasize the fact that what works for me may not work for you. You may decide that what I do, you can kind of cherry pick, and maybe you'll learn something from me, right? Something that I've done well that maybe can correlate to your strategy. I don't want to fundamentally change anything today. I just want to show you what has worked for me because maybe it will give some value to you and how for me how I started scaling in has allowed me to grow my account, probably 20, 30 fold. It's what I use every single day. It's how I manage my account. And then the last thing is going to be, so that's the first two things where we spend the bulk of today and that. The last thing is tips for small accounts. And you're going to find out very quickly. I'm very honest about where I am in my trading. I am not the best small account trader. The reason why is because I trade very conservatively, and it's best used for larger accounts. I tried growing a smaller account. I'm still growing a smaller account. I grew it from $2,000 to like $2,400. It took me like 2 weeks to do that. It's that's where I'm at, right? I'm not gonna get pretty enormous gains. I'm just gonna get pretty consistent and sustained gains. It's not going to be the type of growth that you would see off of other traders. The reason why is just because my approach to scaling in, my approach to scaling out is pretty systematic, and I don't change it when growing a small account. So I'll talk about this. It's going to be a good lesson. It's not going to be kind of fireworks type of ones that we usually have, but it will be exciting. If the audio is messing up, it's on your end, I think. Does the audio sound good for you guys? Just want to make sure. Is the audio okay? Audio is good. Everybody can hear me. Yes. Awesome. Cool. So let me ask you this. But let me ask you this. It better be good because I have like a $400 mic that I'm using right now. If it's not good, I'm gonna return the shit. Or a $300 mic. It better be good. Okay, good. Um, okay, let me ask you guys this. How many of you guys how long have you guys been trading? Let me ask you guys this. Post in the webinar how long you guys have been trading. I want to get a view of kind of where everybody is. 1 year, 8 months, 6 months, a year, 2 years, 2 months. Okay, you guys are all over the place. Okay. So I've been trading for 5 years, just about 5 years. I've been trading for 5 years. So the first 2 years are pretty unsuccessful. First year was very unsuccessful. The second year is where I really found my growth and I really found a system. Uh, my it took me time because you realize very quickly that after your first year, you kind of just learning. I've met some people who've been trading for a month and they're already profitable. I've met some people and it takes them several years, right? It takes them a year, 2 years. For me, it was about a year. What made me stick with it was the fact that I knew that if I could turn my $5,000 account to $2,000 in a month, I can very quickly turn that $5,000 to $10,000 also in a month if I was doing the exact opposite things that I was doing, right? So I flipped my entire mindset and realized, okay, it's with derivatives, it's possible to grow this account. What am I doing? What am I doing that other professional traders are not doing, right? Or other way around. What am I not doing that other professional traders are doing? And then I flipped my whole strategy to sort of follow what they were doing, and then I went back, I back tested, and realized things I could do better. So that's what I did. But before I get into any of that, I want to talk about the lesson plan for today, which is scaling in techniques. I have a very easy approach to scaling in, and I don't really want to spend too much time in the presentation today. I want to spend a lot of time with you guys on actual charts. And the reason why is because it obviously provides better value doing it that way. So my scaling in technique is usually a 50-50 technique, either a 50-50 or a 60-40, depending on how confident I am, and first of all, how far away we are from my exact level. So there are three types of things that I do. It's either going to be a 50-50 scale in, it's going to be a feeler stab size position, or it's going to be a light size position. Those are the three ways I combat a trade. When I'm approaching a setup and I see something, I'm going to approach it in three different ways. Either one, it's going to be a 50-50, meaning maybe it's a break and retest on SPY, right? And I have a very beautiful level here at 460 and maybe my zone is a dollar zone, so I'm going to start scaling in at that 50 cent mark, right? So maybe I start scaling at 460.5, and then I'll add more 460, and that's my 50-50 rule, right? What I do is I literally buy. I literally define my risk. My risk may be, $6,000, right? And that could be at that point in time, that could be maybe 20 contracts. So if it's 20 contracts, I'm going to very easily just buy 10 contracts and then 10 more. But the trick is that I don't always get the other 50% in. I only do that if I have confirmation on the trade. And what does that mean? So what I want to do is I want to jump out over to some charts. The first chart I want to go over is probably the best chart I've seen in a while. This was the trade we had taken on Monday. This was the snow chart. If you guys remember from High Risk Channel, we took snow calls above 205.50. And the reason why we took this trade, right, was because if you go to the hourly time frame, we were in a very beautiful bull flag on the hourly. We cleared a very major resistance at 205.50. It also happened to be a previous day high, right? So I have multiple factors saying, okay, bull flag, continuation of liquidity grab off 200, break above 205.50, and then you go to the 5 minute time frame, you see what do we see here? What's that breakout? Well, we have a very beautiful high volume breakout over 205.50. Okay, this to me is saying, well, this is my A plus setup. This is going to be something I'm going to put size on because it is something that I like. Now, something that I also do, and this completely changed my trading strategy and how I performed, is Monday, Tuesday, Wednesday, I am much heavier size than I am Thursday, Friday. The reason why is because obviously, as you approach your DTE, your date to expiration, you're gonna be doing more volatile contracts. On Fridays, I have my lightest size days, right? I size up Monday, Tuesday, Wednesday, assuming they are good setups. And then on Thursday, Friday, like if this were on this trade, right? I had a 6K position, right? I had a $6,000 position on this trade. If this were a Friday on the same exact setup here, I would have probably a $1,500 position. This is a big mistake new traders get wrong, is they don't understand that the $6,000 position on Monday with a 4 DTE is probably more conservative than a $1,500 position on Friday in that same exact trade. The reason why is because you obviously have a much stronger delta on Friday. So naturally, the contracts are going to be extremely volatile. You guys probably see it all the time. Let me ask you guys this. Your biggest days and your worst days, right? Your biggest up or biggest down days, biggest green days or biggest red days. When do you guys notice it happens? Especially your biggest red days. Which day of the week do you guys find out it tends to be the worst days, or even sometimes the best days? Friday, right? Naturally, it's going to be Friday for most people. Why is that the case? Friday is market maker Christmas, right? It's literally Christmas for market makers. And new traders F it up time in again and again and again because they don't understand, right? And me too. I was the same exact way. Thursday, Friday, right? Thursday, Friday is usually the worst. For me, it's Friday. I have the biggest red day. I used to have the biggest red days on Friday because what did I do? I would take 0 day expiration. I would size the same way I would on Monday, Tuesday, Wednesday. And then here's also the issue too, right? The issue is that on Fridays, you're trading 0 DTE contracts. With 0 DTE contracts, you have to be able to stomach a much larger percent loss, right? Not talking about monetary loss, because let me explain something. If I'm in a $6,000 position on Monday, right, looking for this break and retest, a continuation play higher on Snowflake, if I'm trading this on Monday, I know that I'll go in with a 6K size here, right? And my max risk, if we break under my stop, which is 205.50, is going to be probably just going to estimate 15%, right? That's my max risk. If I'm in 0 DTE and I'm in a 1.5K position, my max risk is going to be probably, right, is probably going to be the same level, right? 105.50, same exact level. But I know that I have to be comfortable sitting through a 35% drawdown, right? I know that I have to be comfortable sitting with that 35% drawdown. And the issue is that people are very linear with how they assess the risk. They think that, yes, I'm going to use a 15% stop loss Monday, Tuesday, Wednesday, Thursday, Friday, and it simply cannot be the case. You have to be adjusting. There's two situations here. You can either one, cut out 0 DTEs altogether and say F 0 DTEs. I'm not going to trade with them because I know that for my strategy, I'm not comfortable with them. Or two, if you are going to trade 0 day expiration contracts, size smaller and understand the fact that you're going to have to sit through a larger percent drawdown. Now, what does that also mean? If you want to, if you're going to stomach a larger percent drawdown, that also means you can't be trimming at 10%. You can't be trimming at 5% unless you're not comfortable in the trade anymore, right? You have to look for not only a larger percent loss, right? If it does lose out, right? Because you have to be comfortable sitting through your tactical stop, but you also should be looking for a larger percent gain, right? It should also be not only on the drawdown end, but also on the positive side if it does work in your favor. So 0 DTEs are a very good tool, but they often result in the largest percent losses and the largest monetary losses because people don't size appropriately. So on the Snowflake trade, right? I went 6K position, but I didn't just come in here and in one fat finger come in and buy a 6K position here in Snowflake. I didn't do that, right? I came in and the first thing I did was I saw, okay, we have a 5 minute candle closure over my 205.50. So what did I do here? Well, I went to my active trader, I got my contracts ready, and when I see a confirmation candle like this, I'm then going to wait for my dip buy opportunity to go long on this trade, right? And that's all I did here. So you'll see the next candle we pull back and it prints a red candle right there, right? That red candle right there. This is the type of candle that I'm buying into, right? This is the type of candle that I'm putting a little bit of size into, but I'm not going to come in here and buy, right off the bat, my full size. I'm going to buy at this point likely a maybe $3,000 position or $2,000 position, right? Understand the fact that my full size is 6K. So I want to get some exposure in here, right? With a 2 to 3K position size with the intention to add more. And what am I looking for here? I'm looking for it to come into my level and I'm looking for it to show some acceptance in that price. I'm looking for it to start wicking a little bit, maybe form a little bit of of one of these wicks on the bottom side, right? That's what I'm looking for. I'm looking for that type of stuff to happen. Then it's going to confirm my entry. And the reason why I'm doing that, the reason why I'm waiting for a little bit of price acceptance at my level is because I want to know where my risk is defined. I want to let it really come up, right? Pull back to my level, I scale into it, so I have some exposure into it. And then I really want to let it sort of define where my risk should be. And once it's done this type of action, I know, well, okay, very easily, my risk is defined there, right? I know, well, as long as we're holding this level, it's good for longs. And if we lose it, I cut out for my loss, right? I want to wait for that type of action to happen because it allows me to accurately define my risk on a pullback, right? We don't want to just be fat fingering saying, well, you know what? Brett said, well, on a break and retest, what we do is we come in and we just buy calls as soon as it approaches our level, right? We're not doing that, right? It's just not the way the market works. We are buying in to get some exposure at our level, and then we are only adding size if we get that pullback and see price acceptance in that zone. This is how you build size in trades. It's not going to always be it pulls back and immediately bloody red candle into your level and you're just buying calls into it willy-nilly. That's not the way the market works. At least for me, I found that what I like to look for is get some exposure 50-50, right? And then I'll get that other ad if I'm feeling comfortable and confident in a trade. So let's play the next candle out and you'll see what happened here is we pull back a little bit more. And then this candle, as soon as it started to flip green on me, I didn't wait for the full body to close. As soon as it started to flip green on me, I then added more size here, right? I then added and built more size in that trade. And then when we got that big aggressive impulse count to the upside, that was where I was scaling out of my calls, getting some out. Now, The issue here too, right, is let's just say, for example, we got that initial push up. We're scaling into some of this red candle, right? And notice it is a low volume red candle. So I'm happy with that. I'm comfortable buying puts, sorry, buying calls into a red candle like that. But let's just say, for example, I intended to buy calls here, right? And it didn't happen. Let's just say it didn't get my pullback level and it didn't happen. It doesn't matter if I only have a 2 or 3K position size in this trade. I'm fine, right? I'm still fine taking profit into an impulse candle like that. And the reason why is because majority of times, I don't really need to get my full size. I'm happy just getting my 50% size, getting some feelers in, feeling comfortable and confident in the trade. And then if I really see it start to wick and go in my favor, then I'll add to it. I'm cool with that. But even if I didn't get that add, I'm okay doing so, right? These are the type of trades I look for. I look for beautiful trades like this where you can really kind of build some size into it, get that price acceptance, and then I'll build some size. But even if I didn't build that size, I'm still going to scale out back in the high day. I'm still going to scale out into an impulse candle like this because you can see it very quickly can reverse on you. And the next thing you know, you're back to break even, right? We have to be scaling out. Now, granted, if it pulled back again, then you could have went for a reentry long here, right? Using, again, the same thing, right? Probably add 50% here, get some feeler size with the intention to add more. But on this second test, you can see here, this one you could have built full size in, but this second test, there's no ability to build full size here. How could you do so, right? How could you do so? All I did was come in and wick off that level. Wick and go. That's just a wick and go. Nothing, no ability to get a second add there. But that's why with every trade I take that is a full size trade, I leave room to average down, right? I leave room to sort of build size into it. Now, granted, on a Monday, Tuesday, Wednesday, that's what I do. On a Thursday, Friday, you have to be more precise with your entries. You have to be pinpoint with your entries. There's no ability to be scaling in to a certain level as you would on a Monday, Tuesday, Wednesday. The reason why, obviously, is because with the UTDs, a drawdown like this, if you start getting calls at 2,650 and it pulls back to 2,550, you're probably down 50%. Right, you're probably down 50 or 40% on your option contract with a move like that. So you obviously, as you progress throughout the week, are going to be tightening up how you're scaling into setups like this. But it's very important to do so, right? It's very important to tighten up as you progress throughout the week. So the second thing I talked about, so that's a 50-50 scale, and that's 90% of the trades I take are like this, right? They're going to be 50-50 scale-ins, and you're going to find out that probably, even though I look for 50-50, maybe 60% of the time I don't get my full size, right? I just get 50% size, it wicks to my level, and then it goes, right? And that's fine. I'm cool with that. The second and third stuff are my feeler and stab size positions. So let's just say, for example, I saw Nvidia, right? This was a trade that we had taken together on live on Thursday. I actually did build size into this, but in hindsight, I could have just done a feeler position here too. Um, we had a very nice level here at 620, and we formed a beautiful. First of all, we swept the lows really nicely. We swept the lows, formed a little bullish pin bar beautifully, right? We then formed a very high volume breakout candle over 620 on that reclaim, and then we pulled back. And this is where we're scaling into calls. On a Thursday, right? On a Thursday, you're gonna see that you'll have to be a little bit more sort of refined with your entries, right? So in this case, you have two ways to enter. You could do two things. You could literally, right? You could literally buy calls here and then add someone into that candle low, or you could do what is known as a stab size or a feeler size. So in this case, what you're going to do is you're going to wait until you have that full confirmation, right? So you're going to wait for you to have that full confirmation. It forms that little bullish pin bar for key level. And at this point, once you get that candle confirmation, that full body, beautiful pin bar confirmation, you then get to enter stab size, right? There's no reason to build more size into this, right? It's either going to work or it's not going to work. There's no reason to go 50-50. There's no reason to build size and to do trade like this. You're just waiting for the little pin bar off your level. And then if you get that pin bar, you get that confirmation, and maybe it sweeps it like that, right? You look for that type of action to happen, then you get in calls. And you know that your stop loss is going to be under that breakout candle low, or sorry, under that wick candle low. That's it, right? You're going to maybe buy in this case $1,000, $1,500, 2K, 3K, whatever it is, whatever your stab size is. It's going to be a lot smaller than your normal size. But whatever your feeler size is, your stab size, it's going to be one order and it's either going to work or it's not going to work, right? This type of trade is very different than how perhaps that snow trade looks. Snow, it's a nice breakout, you're pulling back, very key level, you're scaling into it, you're building size as you're approaching because it can go anywhere. On NVIDIA's chart, you waited for it to break out and pull back, but you didn't get in the pullback. You waited for it to form that pin bar. And you knew that as soon as it formed that pin bar, you knew your exact risk was under that candle breakout low. So you're getting in calls at 621.20 and your stop is under 620.3. So you know that there's no sense in building size into this. You just buy one order, and if it works, it works. If it doesn't work, it doesn't work, and you stop out under the candle low. This is the difference between a larger size position you're scaling in and then a feeler slash stab size. It's very important that you're kind of managing that. And the third technique is just a light size. There's no technique here. It's literally just okay, well, if I'm in Snowflake and for whatever reason I'm not trusting the overall market, I'm gonna go in, right? Maybe half of my normal size on a 50/50 technique. So if my normal size on a Monday is maybe 6K, well, then I will come in with probably I'll come in with maybe $1,000 in my first entry, right? And then my second ad will be $1,000 if I do get that candle confirmation to build more size into it. But the idea here is that there's three techniques that I use. It's the 50/50 scale in, and then it's the feeler stab position size, where you're just feeling if the position works, right? You're just kind of getting exposure. There's no reason to be adding to it unless it really builds your position and you really like it. There's no reason to be adding to it. It's just a feeler slash stab size. And your last technique is your light size, which is obviously you're not confident yet and you just want to get a little bit of position just to get some exposure and work with it, right? Though that's what I do, and that's what I do now. And when do you build size? So it was very important that you understand that, if you're taking a feeler stab size position, it's going to be very different from how you scale into your normal A plus setups. My A plus setup is a trade like Snow, where you have, maybe a strong catalyst. It breaks above a key technical level. It comes back, it retests that key technical level, and you're building size into it because it's an A plus setup. Why? Because you have a catalyst, it's a relative outperformer, and you have a beautiful level defined, right? That for me is an A plus setup. This NVIDIA's chart, right? NVIDIA's chart was not really an A plus setup for me. This is kind of like, a decent trade. The 620 level was not really a beautiful level. I mean, we swept the lows nicely and it probably will go, but it's not my A plus setup, right? And me knowing that, I know how I'm going to approach that trade in a very different manner than how I'm going to approach Snowflake. Snowflake, I got in calls here, I sold into highs, I then built more size into that pullback, and then sold into an impulse candle high. I really murdered this trade. Whereas NVIDIA, what did I do? Right? I got in calls on 620. I got in a little stop position, maybe added a little more into it. And that was it, right? I knew that I was either going to hold 620, it was going to work in my favor, or it wasn't going to work and I had to sell. Okay, that's scaling in. Scaling out is something else I want to talk about. So uh, we talked about we talked about this last time. We talked about knowing your max size depending on the day of the week. Or we talked about earlier this session. We talked about how Monday to Friday you're obviously going to be adjusting your size as you're progressing throughout the week. But that's you guys already know that stuff. There's two sort of scaling strategies that I want to talk about because I'm giving you guys a very one-sided view right now. I'm giving you what works for me. And I don't want to do that. I want to leave you guys with another system that also could work. Because again, what I do is not perfect. There are two approaches you can take. And I've been really talking about this first approach, right? 2.1, where, oh, that's a very bad arrow. 2.1, where you have more size and less trades, taking A plus setups with defined risk and scaling out accordingly. So for example, if I were to go into NVIDIA's chart, right? We got in calls here at that 620 area. We built into it, and I knew my risk was easily defined. No reason to add crazy size to this. Just get your stab position, and if it works in your favor, what are we doing? We'll be scaling out some calls here to previous high of day at 622.7, 622.8, and then we'll be scaling more out at an ultimate target, which was 625. Now, that's how I trade, right? What I'll do is I'll build size into this pullback, and then I'll sell into previous high of day. I also will sell into my key level. I always have a systematic approach where no matter where I'm getting in the position, I will sell into these six different levels. I sell into or TP into pre-market high, pre-market low, previous day high, previous day low. Okay. And I also sell into current day high, current day low. Those are the six reasons. Those are the six levels I always sell into, always take some profit into, even if it's not my ultimate take profit level. For example, on NVIDIA, I knew that I was getting in called at 620. My take profit was 625. Does that mean I'm going to come in here, buy a $4,000 position and hold from 620 to 625? Hell no. I know that for me, I want to be locking in some profit and trimming some as it's moving in my favor. So what I will do is I will look back at this and say, okay, well, where's the previous day high? Where's the pre-market high? In this case, previous day high and pre-market high line up in that same vicinity. So I know that I'm going to be scaling some out, right? I know that I'm going to be scaling some out as we're approaching this level, right? So if I'm getting calls here, I'm scaling out into this green box. Now, granted, it doesn't mean I'm going to be fully out by 622.7, but it does mean I'm going to be probably 50 or 60% out by that point, or I'll be taking at least half trims or 60% trims, sometimes even 80% trims, depending on how comfortable I'm feeling in the position. And the second, that my target though is ultimately going to be 625, right? That my target is ultimately going to be defined off that hourly time frame. And what I will do in this case is I then will hold some runners and take my stop loss, right? Take my stop loss, which was initially here, and move it up to maybe at this point here, right? Maybe move it up to my previous candle high, and then move it up again to there. And then the idea is I'll be shifting my stop basically in profit, right? To make sure that I am squeezing out as much value as I can, but then also raising my stop loss to mitigate it potentially pulling back like this. Because if I came in here and held calls, all the way from this level all the way to here, and then didn't take profit here, I could very easily turn this into a red trade if I didn't sort of trail my stops. So what I'm doing is I'm scaling out to call my calls here and then taking more calls out over here. And if I have any runners, I'm going to look at that previous candle low and identify that as my stop loss moving forward. So if we pull back to it, I'll stop out likely in profit, right? It's not going to be a negative trade. I'm not going to let it stop out all the way where my initial stop loss was, because that would be me turning a very beautiful green trade into a red trade. That's how I operate. But the second strategy, 2.2, means you are taking slightly smaller size on the same A plus setups, but you're expecting larger percent gains. You're not going to be trimming the same way that I trim on NVIDIA, right? You're not going to be coming in here and trimming into previous day high, previous day low. You're not going to be looking for that type of action. You're going to be saying, well, I'm getting in calls here and I'm going to look for a target at 625. This is a perfectly viable strategy and it will work. You're going to have naturally a much lower win rate, but you're going to have a much larger percent gain on your hands. So for me, the way I operate is I might have my average percent gain being between 20 to 25%. There are some great traders who have an average percent gain of 65, 70%, right? And the reason why is because they use that second approach. They use 2.2 as their approach. 2.2 being an approach where they have larger percent gains waiting for their full T1 to take trims. And this is the NVIDIA case example, right? You have two different strategies to approach the same chart. It's the same trading strategy. It's the break and retest, but how you are trimming is going to be very different, right? You're going to have naturally a much higher win rate by taking trims earlier, right? Taking some off into that previous day high, pre-market high, but you're also going to be taking a smaller percent gain. This is going to change how you size into this position, right? You'll notice that some admins trade a little bit differently too. Some admins may opt for a much larger percent gains, whereas other admins may go for a smaller, more conservative technique. And that's where I land, right? That's why sometimes I see some people will jump from one admin's trading style to another admin's trading style, and they'll trade the same size, but it's a big mistake, right? Because one person is comfortable risking 40%, 35%, whereas another one's not going to risk more than 20%. And if you go the same size in both those admins trades, well, you're going to have a big problem at the end of the day if there is a losing trade on one of them, right? So that's the idea. But this is really, honestly, this is really how I size into trades, right? I size into, like, let me go to Apple for another example. This was a trade we had taken together on Friday. And this was a trade that was on 0 DTE. And I saw a lot of people make very similar mistakes here. On 0 DTE, you have to be very pinpoint with your entries. I got in calls on this green candle. I added more into this candle. And my intention was, okay, my stop loss is a clean break above that 184.2, right? That 184.2, which is exactly these candle, sorry, 184.15, which is exactly these candle highs. So if I'm building size into a trade like this, I know that if I'm getting stars on 0 DTE at 130, sorry, 183.6, if it goes to 184, I'm going to be down 20 to 25%. This is going to be a very different operation than it would be on Monday, right? On Monday, I probably would be down 7% or 6%. On a Friday, I'll be down 20%. This is why I recommend, honestly, and this is a complete blip, a pause before I get into this actual chart. This is why I really think that new traders should not even touch 0 day expiration contracts. I think that if you're in your first year of trading, if I were to tell myself something, I would say don't touch 0 day expiration contracts. They are not for you. At least the way I trade and the way I wish I would have conserved myself, my mental capital and my physical financial capital. I wish I never would have taken 0 DTEs my first year. And the reason why was because I was not comfortable sitting through a 20 to 25% drawdown. So when I was down 25% in this trade, as they're approaching my key level, I made an ad. A lot of people will not be comfortable doing so because they'll see they're down 25%. And what they'll do is they will immediately cut losses at 25 or 30%. This is a big mistake on 0 day expiration contracts because we shouldn't be cutting losses here. On 0 day, we're sizing appropriately, we're managing our size a bit differently, and we're going to be scaling down because I know that it doesn't really require much of a movement on the stock for this to work in my favor. I then added a little bit size here at this 184 level, and I got my average down to a pretty good price. And then when the stock pulled back to these candle lows over here, I then was up about 15%. In that case, I am then scaling some out, taking some profit. Even though my ultimate target was back down over here, I'm scaling some out, taking profit out, locking some gains in. And then when we push back to my entry price, I'm fully stopping out here for a loss on my runners. But I still would leave this trade net positive. And the way I'm leaving this trade net positive is because obviously, right, I am scaling into this with the idea, well, I'm going to be getting lighter size. I added 50/50. I got my average cost down to a decent value. And then as it's working in my favor, I'm scaling some out, taking some profit, locking down some exposure. And then when I see it clearly bull flagging and I'm going against the grain here, I got to get out because I know I'm very wrong in this trade and it's time to move on to the next setup. This is how you properly scale. And this is a trade that honestly didn't really work so well, but I still left the trade green, and many of us did leave green. And the reason why was because we effectively scaled into this, knowing that this was our actual level, and we scaled more contracts as we got into our key zone, and then scaled out as it worked in our favor. This is how we have to be scaling in. In my opinion, what works best for me is 90% of my trades are going to be following this 50/50 rule, right? Obviously, if there are trades where I just want to get some light exposure into, it's going to be that feeler stab size. And then there are also trades where I just maybe, let's just say I had a bad day on Thursday. I'm probably going to come in on Friday, light size all around, right? Or maybe it's CPI on Friday. Well, I trade CPI on Wednesday, and I think I trade with two contracts, right? I still did 50/50. I still did one and one, but I trade with two contracts, right? Why did I do that? Because obviously there was not CPI, but FOMC on Wednesday, right? So naturally, I'm going to be sizing a lot smaller on those economic events. But the point is that for any of us, whether you're a year into your trading or 10 years into your trading, you need to define how you're going to scale into certain trades. And for me, it's going to be using that 50/50 rule because that is what brought me to that next level. There was a time during 2021, 2022, where I used a more three-pronged approach where I would go one third, one third, one third. I no longer do this. I just go 50/50 because it's much easier to sort of manage those initial entries. Okay, so that is where I want to get my stopping point in terms of my scaling. Now I want to move over to tips to grow small accounts. So I'm going to spend maybe 10 minutes on this, maybe less than that. And the reason why is because I am not the best guy for small accounts. Just gonna say it out there, right? I know my strengths and I know my weaknesses. One of my weaknesses is that I get very small percent gains. My average percent gain on a given week is maybe 2 or 3%. 2 or 3% on a small account is not a lot, but on a 100K account or 80K account, it's pretty decent. But the idea is that for me, smaller accounts are tough to grow. I did it. I've done it before. I was able to manage it. But the way that I approach the market is a little bit conservative, so it's a little bit difficult for me to do. Um, I don't want to go over this because we already went over this last two sessions ago, but what I do want to go over is this part. For me, it doesn't matter what size account I am trading. I almost always trade it around around the same way. The reason why is because I think the best way to learn how to trade a large account is you first trade a small account. So if you're trading a 5K account, which is a relatively smaller account, or a 3K account, which is a relatively small account, it should be very similar to the way you trade a 100K or a 300K account. Well, fundamentally, it should be the same. What I will do is I will use around 10% average size per trade. And on a 10K account, that's $1,000. On a 3K account, that's only $300. That is why I have a hard time growing small accounts because it takes me a lot longer to build it up. But once we do build up to, 10, 15, 20K, it becomes very easy for me to grow that 25K account to 50K, that 75K to 100K, right? Because the compounding effect really, really exponentially increases. The issue though is going to be the early stages of the compounding, right? A lot of people they don't like that little slow and steady growth early on. They just want to see this happen, right? And that's not going to happen immediately, right? You're going to have to deal with the slow and steady growths before you can see the exponential curve, right? It's not going to be instant. That's why, on a 2 or 3K account, it may take me 3 to 4 months to grow a 2K account to 5K, right? It may take me that much time. The reason why is because the compounding effects are very, very minimal on a 5K account. As you grow that account, trust me when I tell you this, it's so freaking easy to get compounding effects on a 50 or 75K account. I do it every single month. Right now, I just reset my account at 60K. I promise you, probably by the end of February, it will be close to 80 or 80K, right? Maybe 85K, 90K, depending on the month. And I do it every single month. It's not always going to be, you get crazy exponential growth on a small account, and you have to be comfortable with that. If you are comfortable with that, you will go much further in life and trading, just being comfortable with the smaller, modest gains. So 10% average size per trade, $300 size per trade, 1 to 3 trades per day. And if I take one green trade on a small account, I usually just call it off there. I walk away, one green trade, I'm good to go. I make 30, 40, $50. Go enjoy your day, right? No reason to be sitting around wasting your time looking for other setups, burning mental capital. The ultimate goal for traders is to come in taking 1 to 2 trades per day. And I would even say the maximum 3 trades. The reason why I say that is because you have to think like an institutional trader, right? How many trades do you think institutions take? How many trades do you think? Well, first of all, actually, it's untrue. A lot of institutions take thousands of trades because they're high frequency. But I'm talking about the prop firms, right? The people who trade with a couple $1 million in capital and it's fully done by humans. It's usually one trade, maybe 2 trades. Sometimes it's one trade per week, right? It's the ultimate goal is really to come in, hit something with high conviction, larger size, and then walk away, right? Your goal should not be to sit there from 9:30 to 4 p.m., kind of micro scalping and doing this and that, because you're just going to burn your mental capital and you're going to absolutely destroy your ability to first of all, you're paying a shit ton of commissions. And you're absolutely going to destroy your ability to really want to show up the next day, right? So your profit goal on probably a 3K account, and I would even say honestly, this is pretty aggressive, is $100 per day. And that's aggressive. I would say probably on a 3K account, you should be looking for probably like the $50 or $60 range on that type of size. And you're probably looking at me like, wow, that's it's easy for me to say that when I'm trading with a larger account. But on a 3K account, you really have to be more modest with how you are looking at the market. After 2 or 3 months with a 70% win rate, you will be at 9 or 10K, right? You will be there. But you have to be comfortable in with those modest gains because they will add up in the long run. Um, I went over this already a few months ago, but I very quickly will go over this. Limit yourself to 1 or 2 trades. Anything beyond this should be considered lotto size. Understand that and respect these rules, right? Don't just come in and say, well, obviously you watch a reel on your phone and the guy in the reel says, go to the gym, wake up at 4 a.m., right? It's easy for someone to say that, but will you actually do it? I know I won't go to the effing gym at 4 a.m. I know I won't do that, but I do remain disciplined in the things that I know I have to do. And for that, I know that for me, I limit myself to 1 to 3 trades per day, and anything beyond that is going to be lotto size. It's going to be very, very small size. And I know that I shouldn't even be there after those three trades. I shouldn't be. And if I'm there, I'm probably making a mistake, right? I'm probably doing something stupid. But if I am doing something stupid, it better be in lotto size. It better be a very, very small size position because I don't want to be making a mistake on a larger size. Never compromise your position size by going too heavy. This is so important. I saw this happen on Friday time and time and again. I see it happen almost every Friday. I get so many DMs from people saying, listen, I killed it Monday, I killed it Tuesday, I killed it Wednesday. Thursday was a break-even day. And then Friday I came up and I give up my entire month's gains on zero DD expiration contracts. Don't compromise your position size, especially on zero-day expiration contracts. Literally, they are the worst, in my opinion, they are the worst tool to use. They are horrendous. They are horrible. They will kill you. Don't don't use them on heavy size. If you have red days, adjust your size. Don't hesitate to take the trade. Just adjust your size moving forward. Confidence is done by winning and building a cushion in your account. There is no other way to build cushion. Or sorry, to build confidence. The way to really grow an account is just come in every single day. Maybe even if you work a full-time job or you got something else going on, at least I did when I was first growing my account. um, you take one or two trades per week, right? And you build a little bit of cushion in your account, right? You maybe make $100 per week or $200 per week. In a couple weeks, you'll have, $1,000 or $2,000 cushion. Then you're going to be able to size up on further trades because you have that cushion built. And once you've seen 3 months of profitability, you can then scale up every few weeks, right? That's the ultimate goal for you guys. I know many of you guys are probably looking at me like, yeah, I already trade a larger account. This is just built for, this advice here is mostly for smaller accounts. So I apologize if you're on larger accounts, but there are some things here that would apply to you as well. Okay. Do you guys have any questions on anything so far? I know I kind of just spent the last 44 minutes ranting, but do you have any questions on anything? Was this helpful overall? Any questions, comments? I'm reading the chat now. I wasn't reading the Zoom until now, so I'm looking over what you guys are saying. I'm in a small account. I appreciate you, Austin. That's good. Best advice. Very good. And look, I don't talk out of my ass, right? I will tell you very honestly, I'm not the best with small accounts. Just to be honest with you, right? Your guy, right? Your guy, Aristotle, is very good with growing small accounts. He absolutely kills it. I think he took like his 5K account up to 15K like twice. That's not that's not what I do, right? I'm able to take a 50K account up to 80K. I can do that pretty consistently, but doing it on a smaller size just takes me a really long time. I trade full time. Yeah, this is my only job. My sole occupation is trading. What gives you confidence to make that second ad? Carlos or who gave it? Chris. My confidence is developed through price action, not just volume, right? So like on NVIDIA, sorry, on Snowflake, right? If I see acceptance, if I see us pull back to my level and I see it start to form green like this, I'm building size while it's ticking green or while we're seeing that little pin bar forming here. I'm getting size into it, right? I'm looking for it to pull back into my level. Then I'll get my second ad, not as it's red, but as it's really starting to form a little bit of acceptance here, right? That's what I'll do. This was a chart I was gonna show you guys on SPY. I built size into this one. The reason why was because you can see here, right? This is actually a good example of how you build size into positions by reading price action. As you can see here, big aggressive candle down, right? We have our entry defined here at 47.6. Forms a green candle into our level. I get half size, right? No reason to get more than half size, right? I'm just getting starters here with the intention of building more if it confirms. And then it forms this candle. Hell yeah, right? Look at the wick here. Look how beautiful this is. This is so beautiful. I know my stop loss is here. I will build more size into this red candle, even if I'm getting a worse average here, because this is a beautiful chart, right? Look at the wicks over here. It's absolutely incredible. This is pointing downwards, and the reason why is because you have those wicks forming. You have a nice breakdown at our key level. I know my stop loss. I can build a little bit of size in here with the intention to take some off back into that low day. You can see the trade ended up working really well and they're breaking down very nicely. But the idea is that how you build size is not just done through volume. It's done through reading the chart, right? You can see these wicks, right? These little pin bars. That for me is consistent with continuation of the downside. So I will build size, not just into this green candle, but I would add more into a red candle like this. All right. How do you know when to get into a trade if you don't get your targeted level? Sometimes I miss out on trades that went too early. Express trades, you don't, right? If there is no level, there is no entry. That's just the way I work, right? If it doesn't pull my level, I would rather miss the trade and watch it like an idiot than jump into the trade and not be at a level and lose on it like an idiot, right? I would rather miss the trade and watch it and be like, damn, I wish I would have gotten that trade, than jump in, FOMO it, and take a loss because I will feel so much worse taking a loss on a FOMO trade than I would by just missing a trade that never should have been a trade altogether, right? For me, the best entries are at key levels. And if there is no key level, there is no entry point. If you have a smaller account, would you have to take the 2.2 approach because you need it? Yeah, Michael, that could be an argument, right? That's the way that I think Aristotle grows as a small account is that he does use that 2.2 approach, right? Where the hell is it? I don't know where it is, somewhere. But yeah, that's what he does. He uses that approach where you will look for larger percent gains. That's what works for him, right? You could argue that that would be a more effective way at growing a smaller account. Maybe that's why I haven't been so effective at it. Your average trade price is what? I know you said you don't do small. My average trade price. I'm not sure what you mean by that, Dre. I trade on a 50K account, 50 to 60K account until the end of month, and then end of month it's usually higher than that, and then I reset it. But I start off around 50K. Can you briefly speak on the concept of scaling in to bring your average? MSleek, that was the kind of the premise of today, right? The premise of today was talking about that 50-50 rule, right? Where, I'll build size into it as it approaches my level, right? So if I see I have a level here at 184, I will get starters, 183.6, then I'll add more to lower my average cost into my key level, right? But I'm not always just adding just a lower average cost. I'm adding because it's approaching my key level, right? So I'm building size into it, doing a 50-50%, 50-50, meaning I'm getting in size here and then adding more at hopefully a lower average cost into my key level, right? How do you find your swings or leaps? That's a different Romero. I know that's a good question, but I don't want to go over that today because that's a completely different topic, but happy to do that um, in a different class. How do I know when to use 1DTE versus UDD? My opinion, if you're a new trader, you should be using 1DTE altogether. I think 0DTE is a fast pass to losing a lot of money. Um, look, I'm not saying don't trade 0DTE, but I mean that's kind of what I'm saying, I guess. Um, I think that 0DTE should be used before 12 o'clock. After 12 o'clock, it should not be used. And if you find that it doesn't work for you, I would choose 1DTE is better. I'm obviously very biased, right? I'm just be honest with you. I know for me, I love 1DTEs. Some people would come in and they would say, 0DTEs is their bread and butter. And I wouldn't say that's wrong. I just think that it's wrong for me. Why don't you swing trade as often? I do swing trade. I just find that this is something that I've learned, right? I know that for myself. The kind of like a weather forecaster, right? You guys notice how a weather forecaster always gets the weather wrong if it's 2 weeks out or 3 weeks out or 4 weeks out, but then they tend to be pretty right if it's that next day or if it's the next hour. Well, it's the same way with trading. It's very easy to forecast what's going to happen in the next 5 minutes or 15 minutes. It's very difficult to forecast what's going to happen in the next day or 2 days or 3 days or 4 days. I can very quickly tell you probably what's going to happen on the Apple chart, right? We're very easily likely to see a 184 rejection. It's very simple, right? It's a very key level. We're pulling into it in low volume. We're going to see rejection here, right? 99%, 95% chance we'll see rejection here. But if you ask me, what is Apple going to do tomorrow? I would have a difficult time telling you that, right? And the reason why is because as you start increasing the length of your forecast or the length of what you're assuming the market's going to do, there is obviously a larger degree of uncertainty. See, when should I stop working a job and be a full-time trader? It's a good question. I think that when you're I mean, at least for me, when my trading income was double what I was making as working a full-time job, that was when I left my job, right? Because I was missing trades, I wasn't able to manage my positions properly, and I wanted to have more time at home. So that was what worked for me. But I would say if you can do a full-time job or a part-time job while trading, do it, right? And never give that up until you are ready, right? And you will know when you're ready, right? You will know when you're ready by the time when you really feel comfortable, monetarily. You have probably 6 or 8 months of savings, and you are making double what you're making in your full-time job. I mean, I was making six figures before I was trading full time, and I didn't leave until I was making probably triple that. No, probably double that. Double that. How do you pick expiration dates? DD Investor, shoot me a message on Discord and I'll send you a video how you pick expiration dates. I did one for you guys a couple months ago. I can send you that. Uh, you've been in snow puts, snow puts. Hmm. That's a tough one. Uh, volume video, but yeah, I can repost the volume video. When should I withdraw my money every month? So for me, it's every month, but for you, it could be sooner than that, right? It could be every 2 weeks, could be every 3 weeks, whatever it may be, though. You want to get to the point where it's systematic. So, for me, I like to pay myself every month. There were some months, right, where I did not pay myself in September of 2023. I did not have a very good month. I think I made like 5K or 4K. I didn't pay myself, right? But most months I do pay myself. Can you repost the Kidelos video? Yeah, of course I can do that. How do you monitor paying taxes? You find a good CPA and you do it quarterly. So I do. Um, yeah. How much do you pay in taxes without write-offs? I would probably would have like probably like a I don't know, probably like 150K tax liability if I didn't have write-offs. But I have a lot of write-offs. Is this part of the mentorship? No, this is not part of the mentorship. This is just me working with you guys at Honey Drip. This is just Honey Drip, guys. Snow 205. Take a look at De Niro. Just text me on Discord and I'll send you the WFC chart after today. Do I trade on LLC? No, I do not. I trade on a personal account. Yes, I do have mark-to-market election. Do I use RSI? I use RSI only for swing trades. Nothing more than that. My swing trade strategy has RSI in it, but but not for day trading. Day trading, I just use price action and volume. I'm trying to, guys, if you see me staring at the Zoom, it's because I'm trying to read the chat, but there's so many questions. How do you calculate risk reward? Um, so for example, right, on the videos chart on the trade we had taken together on Thursday, my ultimate take profits here at 625, right? My ultimate take profits here at 625. I'm getting in calls at 620. In this case, my risk reward in this case is going to be, right, is going to be opening long here at that 620 level and then taking profit here. Actually, let's fix this properly. Open long here at 620 and change and take profit at 625. So my risk reward here will be a 3.95, meaning I am risking very little for a much larger percent gain. But the issue here is that I didn't sell there. I sold here and then sold more over here. So in this case, my risk reward was somewhere in the vicinity between here and here, right? Because I'm scaling some out here and I'm scaling some out there. So my initial risk reward was around a 1.95, a 1 to 2. My final risk reward was probably somewhere in the midpoint between these highs and these highs. So probably a 1 to 3 or a 2.67 and change, right? So obviously your risk reward is going to be a bit complicated when you have multiple scale-ins and multiple scale-outs, but generally speaking, all you do is you mark your entry price and mark your exit price, and that's going to be your risk reward, right? Depending on where you're going to stop out, depending on where you're going to take profit, right? So if your stop loss was 50 cents and your take profit was $5, then you're going to have a pretty phenomenal risk reward. It just depends how large your risk is compared to your reward. I do not watch option flow. I choose not to watch option flow when I trade. Does day trading count as income like renting? Yeah, it absolutely does. I I I what's it called? Um I basically pay taxes like anybody else would with trading, right? You pay taxes quarterly and that's considered income. So yeah. When trading, sorry, I'm trying to read all this stuff. Is there a way to identify liquidity sweeps? That's Cube, definitely a different question. Ask me that in Discord. I'm sure I can help you out. I use a few EMAs. Yeah, I use these EMAs. I use EMAs here. These are all the EMAs I use. Where is it? Oh, it's not there. I use these clouds, either these clouds or sometimes I just will use basic EMAs. Like this one is the hourly 21. I also have the hourly 9. That's pretty much it. I keep my charts very clean. I don't like to have too many charts up or too many indicators up. But you guys see me, like if you guys watch the live trading, right? You guys know what indicators I have. It's pretty simple. I don't really go crazy with the indicators. Uh What's the tax percent for short positions? It's 28%, I think. I can't remember. But for me, I don't pay taxes the same way a regular trader would. With mark to market, it's different. It's absolutely different. I live trade in Zoom every day. We live trade in Zoom every day. Uh yeah, every single day. Yeah, exactly. I mean, look, I use the 9 and 21 in VWAP. That's exactly what I use Mazel. Andrew Boyd, how do you join? You're already here, man. This is the same Zoom here. If you're in this meeting right now, you're part of Honey Drip. All you have to do is join the live trading Zooms. Uh okay. How many hours a day are you actually looking at charts? I wake up around 7, 6:30, 7, probably 7-ish. And from 8 a.m. to around noon, I'm on charts every single day. My long-term strategy is to buy stocks that I absolutely love on dips. Amazon, AMD, Apple, uh, Tesla. I'm buying some Tesla recently. I bought some shares in Tesla on Friday. Hopefully that works out well. But now it's a bit more of a kind of passive on my long term because I'm not really adding too much. The only name I'm adding to is Tesla. Do you think the stock market is overvalued? I think that the stock market goes through ebbs and flows. And right now we're in an upward ebb. So at this point, I think, yeah, I think that we need a pullback. Yeah, I do. I think we short term need a pullback. But what does that mean, right? You still, if you are building a long-term account, you should look to get in soon, right? You can't wait for 400 in SPY anymore. You can't wait for 360 in SPY anymore. You have to be getting into dips, right? And the best way to do that is to start picking companies that really haven't moved so well, right? Like names like Tesla, I mean names like Amazon, right? Amazon still hasn't broken all-time highs yet. This is a name you could look to, well, actually, technically it is approaching all-time highs now. So you might be out of your luck soon, but Amazon will break all-time highs. It will break all-time highs soon at this 188 level. I think this will go to $200 plus by 2025. I think it will go to 200 plus. All right, guys, this is where I want to end it. The reason why is I'm getting like a bajillion questions on other topics and trading strategies and all types of stuff. So I'm gonna end it here, guys. Look, this is not the first and last class I'm going to do with you guys. You guys know that. So I know many people are asking questions from Fibonacci retracements to stop losses to MACD to RSI. Trust me when I tell you this, we'll do more classes like this. I promise you, right? So don't feel like everything has to be answered in one class. Um, Look, we'll do more of this stuff. Obviously, it's not going to be every single day, but we'll try to do it at least once or twice a month. That's the goal. So listen, I'll catch you guys all Monday for live trading. I'm going to absolutely kill it. And thank you all for joining in. Appreciate you guys, and we'll see you next week. Bye, guys.